Okay, we'll get things started in about 2 minutes. So give us another 2 minutes. That's good enough. I just remembered I got another meeting I got to get to, Doug. Okay, let me get into what we've. You guys, a lot of folks have signed up for this webinar, and as you can see on the screen, we've got National Group Marketing, and National Group Marketing with TAN will be handling all the contracting. And as far as product information, please get in contact with me and not TAN. And that's my name down here at the bottom, Rick Thornton. So what I'm going to do now is introduce the host. And the host of this webinar will be Doug Chapman, who's president and partner with National Group Marketing, and Rick Thornton, business development with Insurance for Dallas. And these are some of the things that we're going to go over today, what we will cover in this webinar, how to service clients who are not in a special enrollment period, your solutions to clients who need a PPO network where most doctors participate. That's very important. I know a lot of your clients are probably complaining about the fact that they have to use an HMO and their doctor's not in there. So we're going to take care of that during this webinar. How to reduce premium and deductible costs for clients. What are you selling in lieu of short-term policies? Now, we know that we've got some short-term policies coming up this year, and I believe they are going to be for 3 years, so they're not going to be that short. And we're going to have something on this policy that would actually add to it a little bit. A wrap around. So it's going to be very interesting, some of the things that we're going to be doing with this policy. Right now, there is no Obamacare penalty fee for 2019 forward. So now what? How do we manage that situation going forward? We'll touch on that just a little bit. And what are the policy benefits of selling PAL? PAL stands for Philadelphia American Life Insurance Company. And so let's go over that right now. Now, what I've done, I've taken a 58-year-old male, a 56-year-old female, and non-smokers in Dallas, Texas, 75067. And this is the premium. This is the PAL premium over here. It's 77608. And as you can see, the Blue Cross premium is 1345, almost twice as much. Now, these premiums that you're looking at here, these were about 2 years old when I originally did these. So the Blue Cross Blue Shield policies have actually increased over that period of time. Network, we use a PPO network, and this Blue Cross Blue Shield policy uses an HMO network. Deductible, we have a $2,500 deductible where Blue Cross Blue Shields, its deductible is $6,850. Now they've changed these deductibles around a little bit, but for all practical purposes, they range from $6,000 to $7,350. DOV, doctor's office visits. We'll get into how our doctor's office visits work, but clients will get a $60 credit, whereas with Blue Cross Blue Shield, you only get 2 doctor's office visits for $40. Now, that $60 credit, that's basically unlimited doctor's office visits for all practical purposes. Out-of-pocket, we don't have an out-of-pocket. Blue Cross and Blue Shield's policy in 2016 was $71.50. Commissions. I know everyone wants to hear about commissions. Well, the advanced commission on this PAL that you're looking at here is $14.10, where that's over what, 6 months, I believe it is. And then starting in the 7th month, you'll get a check for $235 a month. The commission off of Blue Cross Blue Shield is $67.25. So that's at a 5% commission rather. A lot of people may not want advances. That's fine. If you don't want advances, then you just get that $235 for 12 months. And then I believe in the 13th month, I think it goes down to about 10% or something like that. These are some caveats that we have here, and we'll go into this in a little bit more detail. But some of this information is just kind of repeating what I've already said. Now, who should get this product? Let's look at that. Good candidates for this product: healthy individuals, people on COBRA, self-employed people, folks between jobs, folks that have out of control premiums, people in need of a PPO, and people in need of a lower deductible. Poor candidates, women needing maternity. This product is not designed for folks who want to have a child. So this is not what this is for. People receiving a subsidy and cost sharing, and people with systemic pre-existing conditions, and people on costly meds. Now, even if you're on a costly meds, we now have a medical card for you, so we'll be able to manage that a lot better now, full-blown medical card. And I believe Doug is going to talk about that in just a little bit. So what I'm going to do now is continue and give you guys some ideas on why the ACA is so much more expensive than this policy. Well, all ACA plans must have the 10 essential health benefits, and those are hospitalization, prescription drugs, emergency services, laboratory services, ambulatory patient services, rehab and facilitated services and devices, preventative wellness and chronic disease management, mental health, substance abuse, and behavioral health. Our policy has all of those things in it, and you would think every policy would have that. But what our policy does not have is maternity and newborn care, which all of you know that adds a huge cost onto a policy, and pediatric dental and vision care. Now, we usually have dental and vision embedded in all of our policies, and these will be for children and adults, but they don't automatically come in a policy like a ACA policy would have. Also, keep in mind that in addition, all your ACA plans must have no pre-existing conditions limitation. So on all of those policies, there's a no pre-existing conditions limitation clause. And that's very important because it really adds the cost of a policy. Unlimited coverage. So with an ACA plan, there's unlimited coverage. And last but not least, with an ACA plan, there are no copays for routine physicals. So all of those things are hidden costs that are in your ACA plans. So this is what I'm saying here. What I'm saying is that I can actually go in with an ACA plan. I can sign a client up on December 15th, which is the last day of open enrollment, in the hospital. And guess what? On January 1st, that insurance company has to start paying that bill. So this gives you a really, really good idea of the cost of health insurance and the cost of an ACA policy. Now, what I'm going to do, we're going to save most of our questions until towards the end. But in the meantime, what I'm going to do is bring Doug on. And Doug, tell us a little bit about yourself and what you're doing here.
Thank you, Rick. Okay, I'm Doug Chapman, the CEO of National Group Marketing, and I've been in the health insurance business, individual major medical business, for over 35 years, worked with all the major carriers at one time or another and thousands of agents. And I would say even before the ACA came out, we noticed these the 30-40% rate increases year after year, deductibles getting larger, coinsurance getting larger, benefits coming down, premiums going up. And at some point with that type of vehicle, investment vehicle, it becomes not a good investment. At some point, the juice isn't worth the squeeze. And so we noticed our agents couldn't keep business on the books, rewriting the same clients year after year. So you're not doing your clients a favor, putting them in a program that continues to go up while it becomes weaker every year. So when 2011 came out, we looked at this product and made a decision basically to declare war against major medical. We didn't believe it was good value. And we hadn't thought it was good value some time. So we looked at this product. It's kind of a revolutionary product, but it's been around since 2010, since 2011, and it's evolved and gotten better and better and better. I actually have this product myself. I've had it for 6 years, had several surgeries, had one 3 months ago, and we'll show you the claims, and actually made money. So it's actually a better product. We call this a health and income protection package. and we're going to go over the benefits with you here, and I'll kind of compare it to your traditional major medical. But keep in mind, when you're competing with a major medical policy where you've got the consumer who doesn't know or care what anything costs, and doctors and hospitals don't have to compete with each other for the consumer's business, then you're never going to fix the healthcare problem. So what we've done as professionals in the industry, it's our job is to bring value to our consumers, to make sure that they've got a great value proposition. And that's exactly what this product does. And not only will your business stay on the books for years and years, but keep in mind the commissions are 5 to 6 times higher than your traditional major medical. The shelf life is going to take you from 6 to 12 months on a major medical before you have to replace it, to 6, 7, 8 years, which is this product gives you. So we're talking about a value proposition, and the concept philosophy is your consumers do not need to be paying tens of thousands of dollars a year in premiums, in huge deductibles, huge premiums, large co-insurance, co-pays, admission charges, before with 30, 40, 50% rate increases year after year with a 15-year track record. What the consumer needs is a value proposition. They need money to pay their medical bills. They need money to protect their income if they have medical bills, and they need rate stability. And that's what this package of benefits will provide for them. So we'll get into the product here, and then we'll answer some questions at the end of the presentation. This is a Health Saver Plus 3 is our top seller. This is the Evolved, actually the 4th generation is coming out in just a few months, but it is a defined benefit plan. It is not a major medical. You'll notice it says limited benefit here. The limits, to be a major medical, you can't have any limits. So limited benefit just means you've got a limit. You got a $5 million limit. You have aggregates of 100,000, a $250,000, or $1 million per person in the family. You can choose, but those are limits. But the limits are plenty of money to pay the medical bills. So there's nothing wrong with a limited benefit plan as long as we pay the medical bills. It is a defined benefit plan, the high-end defined benefit plan. It defines exactly what it pays, and it pays in specific amounts. Very different than your major medical. As you can see here, a traditional major medical, you have a large deductible that your client's going to have to pay, and that is deductible is going to be probably for 95% of your claims come into play. And your deductible and your co-insurance before the client gets a return on their investment. With our plan, it's exactly the opposite. We flip that kind of upside down. For 95% of your claims, there is no deductible. So it's first dollar. And only 5% of your claims, which your hospitalization only, would be considered where your deductible would come into play. And even then, your deductible is actually applied towards the benefits, similar to a car insurance. If you've ever filed a car insurance claim, they simply remove the deductible from the check they're sending to the hospital. We'll show you some claims here later on in the presentation. Here's a sample of how this deductible would fit. This is a 3-day hospital stay with this plan pays $6,000 a day. The surgery, anesthesia, the total benefits came out to $24,000. This got a $2,500 deductible that is simply removed from the check that they're sending to the hospital. So the client doesn't have to necessarily pay it first, but they actually pay it last. Now, if the hospital charges $18,000 and the defined benefit plan is going to pay $21,693, there's actually going to be an overpayment. If there's an overpayment, the overpayment always goes to the policyholder. That's called excess indemnity. I myself have had 3 surgeries. I've made money every time above and beyond my deductible by staying in network. Now, if the hospital charges $24,000 and the plan only pays $21,000, in this scenario, the client would pay the difference, which is the excess benefit. In this case, $2,306.
Excuse me, Doug, for 1 second. Can you go back to that last slide for a second, please? Yeah, and one thing I just want to highlight on this slide, if you notice, there are 3 different checks being given out. One goes to the facility, which is the hospital. The other one goes to the surgeon, and another check goes to the assistant surgeon. So we divvy that up in different ways, and you'll see that a little bit later in the presentation, but I just wanted to point that out.
Good point. Yeah. So many times, if our clients stay in network, we'll talk about the PPO network, which, by the way, the client owns and not the insurance company. So it's more of an education than a sale, educating the consumer to stay in network and shop, just like they do everything else in their lives. Will land them generally where they won't be out of pocket any money, and most of the time actually make money with this product. However, if they're out of network or the bill doesn't pay the full amount, they'll have the difference, which is what they would pay the hospital. The one thing with a major medical plan is you're always going to have an out-of-pocket. It's called deductible and coinsurance.
And you pay that first.
And you're always going to pay that first, and you're going to have that every year. So again, this is more of a first dollar product, as you'll see when we get into the products. Since all benefits are defined in the plan, the consumer actually knows what it pays before he ever goes to the hospital or doctor. What a concept. This is the only industry, the healthcare industry, where consumers have no idea what anything costs, nor do they care. Why should they? If they have a major medical, they have a deductible and coinsurance they have to meet first. So that takes them out of the caring for what anything costs. And that is one of the major problems in the health insurance industry. We'll never fix it. It's going to have to be fixed from the ground up, starting with the consumer, educating the consumer, and developing a super consumer. This plan is a $5 million lifetime maximum. There are 3 price points.
That's per policy.
That's per policy. 3 price points that you can select to adjust your premiums. The first one is your base plan deductible. Again, with this plan, the deductible only applies if you spend the night in the hospital, and which is I think 3 to 5% of the time in most cases. Calendar year maximum is an aggregate.
I'll give you an exact number for that. 61% of all operations are done on an outpatient basis.
Okay. That's an operation plan. Number of benefits. You have 3 plans to choose from, 1, 2, or 3. With this program, you can choose any doctor hospital you choose. We don't care, without penalty. You can go anywhere you want. However, if you use the PPO network, voluntary network, which happens to be PHCS multi-plan, the consumer owns that network. In other words, the consumer would get the repricing and not the insurance company. I always show my clients in their major medical how if they don't stay in network, they're going to be severely penalized. They're going to double or triple that deductible coinsurance. That gives you an idea how much money the major medical company is saving if they're going to triple your deductible if you don't let them save that money. And they're not going to share that with the consumer. With ours, again, the PPO discounts go to the consumer, not the insurance company. So it's going to take that consumer from retail pricing to wholesale pricing immediately, electronically, before we have to even look at paying the claims. And the average repricing is generally going to run between 40 and 60%. It's huge when you understand how these hospitals and doctors overprice. So part of the selling process is educating the consumer and ourselves, for that matter, on how these hospitals and doctors actually work. These are your calendar deductible options. I will tell you the 2 top deductibles is $2,500 and $5,000. I have a $5,000 deductible. Why do I have that? Because I never have to pay it anyway. As long as I stay in network, my repricing is generally plenty of money to get my bills down where I won't be out my deductible. We'll show you some claims here in a minute. Your aggregate, our top seller, you can choose 100,000, $250,000, or $1 million. This is per person. And I generally
per person in the family.
Per person in the family. You have 5 people. Each one of them has their own aggregate. Our top selling is the 250,000 aggregate. This is per person. Think of it as a bucket of money. And anytime you have a medical expense, hospitalization, surgery, etc., the Philadelphia American will dip into the bucket, pay your money out of your aggregate, and every January they're going to refill your bucket. You're going to get a brand new bucket of money every January. This is important because this plan will actually pay in addition to other insurance if you ever have to have other insurance. So it's important to understand that that's going to reset every January, and you've got a brand new bucket of money. This is your schedule in the hospital. We're going to talk about the 2-unit plans, the one I've had for for 6 years.
And keep in mind, folks, this page here is only for the facility. It has nothing to do with the doctor.
Now, this is simply the hospitalization portion of the plan and outpatient surgery. And as you can see here on 2 units, one we'll talk about, your hospital confinement, the plan will pay $3,000 a day for an individual that's in the hospital for sickness. If it's an accident or injury, it doubles at $6,000 a day. Now, keep in mind, we have to stop and educate the consumer and first educate ourselves. Most insurance agents been in the business 30, 40 years, couldn't tell you what a hospital costs. And those days are over. We need to educate the consumer. In the Dallas-Fort Worth area, the average hospitals are going to run between $1,500 and about $2,800 a day. So keep in mind, they're getting $3,000 or $6,000 a day. It stacks every day. Now, $4,500 for ICU, $6,000 again on accident or injury for ICU, $400 mental and nervous, substance abuse. As you can see, you've got $1,500 a day for skilled nursing and rehab. And again, this stacks on top of your daily benefit.
So what he means when he says it stacks, we've got $400 plus $3,000 for the hospital confinement. So we have a total of $3,400, and the next one will be $1,500 plus that $3,000. It's $4,500 per day. Yes.
Correct. Now, on an outpatient chemotherapy, would be $1,500 per treatment. Now, when you get into your outpatient surgery, this is a huge feature in this product. As you can see here, the plan will pay the daily benefit for outpatient or ambulatory surgical centers when the surgery is performed as a result of a covered injury or sickness. The calendar year deductible will be waived for the first claim incurred in a county for each person when surgery is performed under general anesthesia. I just had a surgery 3-4 months ago, and again, I went in and left the same day. My $5,000 deductible was waived, and my bill was repriced because I was in network, and I got almost $10,000 in excess indemnity payment. We'll show you the claims here later. So I've had 3 surgeries with this plan over the years and never paid my deductible because they were all outpatient surgeries. We all know due to modern technology, most surgeries are done outpatient or same day. So deductible is irrelevant in that scenario. As you can see here, the surgical benefit, they have, it's called RVRVS, which is a schedule that Medicare Allowable uses. And if you have 1 unit, that's going to be equal to what Medicare Allowable pays. 2 units would mean 2 times what Medicare Allowable, and 3 units 3 times. Generally, on educating a consumer and you and ourselves, generally the surgeons will charge 20 to 25% over Medicare Allowable rates. So if I've got 2 units, I'm going to get 200% of Medicare Allowable rates. And I may only owe 125% of Medicare Allowable rates, or 120%. So you have plenty of money for surgeons, plenty of money for assistant surgeons. The physician, $100 here is for the doctor to come by with his clipboard, spend about 10 minutes with you. That generally is $150, repriced to about $75. So again, $100 is plenty of money there. We will also pay 20% of the surgical benefit, and the daily anesthesia is 25%, which is industry standard. Now, when you get over here, guys, to the outpatient, this is a separate outpatient, I guess you could say deductible. It's more of a copay, a one-time copay, basically. And that one-time copay a year is $50. And it is waived the first 3 doctor visits. So when I have 2 units, that means I have a $4,000 bucket of money for my outpatient. This is my doctor visits, labs, x-rays, runny noses, more where I live, more frequently used benefits, generally least expensive. The way it works is this: my $4,000 bucket of money resets every January. This is for every member of the family. When I go to the doctor, this will pay the doctor electronically $60 for the doctor visit. Now, we got to stop there and educate the consumer, and because they think it's a $120 doctor visit, and it is. It lists out $120, $130. The average repricing in network is about 49%. 47%.
In the
Dallas-Fort Worth area.
It's different in every area.
So that means that $120 doctor visit is going to be repriced instantly to about $66. That means I'm going to have a $6 copay in that scenario. Now, if it's $50, he's going to get 50 and I'm getting a $10 check in the mail. If it's $66, he's getting 60 and I need to pay him $6 right at the point of sale or when I'm there at his office. So,
and keep in mind that deductible is waived for the first 3 visits, so it's applied in the 4th visit.
yes.
And that's only for the doctor's office visits. When we come down to the other outpatient surgeries, outpatient benefits, it's actually not waived, and it is applied immediately there. So he'll go into that.
Basically a copay, it would come out. So as an example here, an MRI or CAT scan, this plan pays $350. We have to stop and educate the consumers. They think an MRI is $1,500, $1,800, and it absolutely stickers for that. The largest repricing is right here in the MRIs, labs, and CAT scans and X-rays. It's 60 to 80%. Very important we educate the consumer they don't work for the doctor works for them. And we'll make sure they know how to stay in network. I got an MRI, it was $400, but it's stickered at $1,800. So if I go in and it's $350, then I'm out $50 on that MRI once I've met my copay. Now, had I had a major medical, I'd have to pay all of it because it would go towards my large deductible. So again, and by the way, we're saving hundreds and thousands, sometimes 10,000 and up a year for a family, many times in premiums. So all these benefits stack, and you may have one doctor visit that has 3 or 4 benefits in there. But rule of thumb, guys, with 2 units is going to pay about 60% of your medical bills. If you stay in network, it's going to reprice about 40%, at least 40 to 50%. So 40% discounted and 60% of your bill is 100%. So that's the simple way to look at it by staying in network. As you go down here, the prescription benefit is the only part of it that is an actual reimbursement. You do have a discount drug card. We have a fully insured drug card that, by the way, takes pre-existing conditions. We can talk about it later on, but in the belly of the policy, you've got a true reimbursement. After your discount, they're going to pay you $10 for generic and $20 for brand name. Most of your brand name, most of your drugs are under $100, repriced down. And
well, you can actually go to Walmart. You can get some generics for $4, and if the plan is going to pay you 10, you're up 6. Yeah. I usually tell my clients to wait 6 months to a year before you actually turn in all your claim forms. You don't have to do it every single month. So.
Yeah, just turn them in every 3 or 4, 5, 6 months on your prescriptions, the more frequently used prescriptions. But yeah, I got 4 prescriptions and mine is $28, and I got, as you can see, $40 back. So no, not a problem there. Obviously, if you've got some serious larger drugs, we have a drug card for you. We will show that to you. It takes pre-existing conditions. We don't sell that to the client unless they have big drugs and need that. And we can talk about that later. Preventative care pays $125 a year. No deductible for that. No deductible for your first 3 doctor visits. Okay.
Now, there is a 60-day waiting period on physicals.
On physicals, correct. And your ambulance indemnity is $500 for ground, $1,500 for air. Nothing special here, but we're going to put another $10,000 on top of this with the next policy, the next couple of slides here. So preventative care, we do have an option to increase your preventative care rider. And what this does, if you have 2 units, as you can see, this is very inexpensive. I highly recommend putting this on here, and it will increase the doctor visits from 60 to 80, labs and everything, and then increases your preventative care.
Now, this outpatient down here, I haven't corrected it yet, I don't think. Okay. Wait a minute, no, that's correct information. I stand corrected. No, I'm sorry.
So you can put both of these riders on there, which will increase your emergency room and increase your doctor visits and your wellness preventative substantially. And it's very inexpensive. It's about 10% of your premium, and you're really beefing up your outpatient as well there. But again, the key to this whole program is educating the consumer to stay in network and get all their medical bills repriced from 40 to 60% before we focus on paying the claims.
If go back to that slide again, if you look at this closely, Paulick will actually pay 3 and 3 is 6 plus 2 is $800 for an emergency room visit, and that's first dollar benefits right there.
Mhm.
So if you're in the network and it's discounted, the out of pocket on a emergency room is not that much money,
Correct.
depending on where you go, of course.
Exactly. Again, guys, you're not dealing with big deductibles. You're not dealing with huge premiums. So your client's out of pocket or cost of insurance is much lower with this type of product, and he's got much better return on his investment. What is pre-existing conditions? Again, why are rates so good? Like Rick alluded to earlier, an Affordable Care Act program is only good for two types of people: people with government subsidies or people with serious health problems. And that's the only place that makes sense for the Affordable Care Act, because it takes pre-existing conditions. So you're in a block of business with either people who have government subsidies and you're paying for those subsidies. That's why you're paying more, because they're not paying at all. And then you're paying for pre-existing conditions where people have health issues. So if you don't have health issues and you don't have government subsidies, you need to be over here saving a lot of money and getting a lot of better value for your dollar. We do have a 12-month pre-X. We don't take on claims. Example, it's a 12 and 12. This is the condition you're currently treated for within the previous 12 months. We would not cover for 12 months. We would probably take you in most cases, but we wouldn't pay for that condition. However, as long as you stay in network, your medical bills will be repriced. You'll get the PPO network discounts because, again, the consumer owns the network. So let's just say you're being treated for diet control diabetes. Insulin is a decline, but pill control, we would accept you with a rate up. The diabetes wouldn't be covered for 12 months, but you would still get the repricing if you're in a network doctor from 40 to 60%.
A positive way of looking at this is what I tell my clients is pre-existing conditions are covered after 12 months of continuous coverage on the policy. Therefore, it's covered in the 13th month. That's just a positive way of phrasing it.
Correct, guys. And again, if you have a lot of our pre-existing situations are actually prescription drug related, we do have a fully insured drug card as an option to this policy that pays for pre-existing conditions up to $400 a month. So if since it takes pre-existing conditions and if somebody has one that's prescription drug related, we can generally fix that problem for them immediately and pay for their meds with our fully insured drug card. Here's how the plan works. Once your clients understand the huge repricing and the huge value they're going to get by staying in network, they need to understand they don't have to negotiate anything. It's instantly done. All they have to do is show up to the doctor or hospital and give them the card, and here's how it works. When they will present their PALIC ID card at the time of service. The doctor or hospital will verify coverage based on the information on the card to call in verify the benefits. Charges will be forwarded to a national claims clearinghouse electronically. Be electronically forwarded to ECOM, who will reprice the claim. Once the ECOM reprices the claim, it's sent electronically in the Philadelphia American's claim system. The PPO discount will be shown on the EOB report that is sent along with the claim payment to the provider of service. Most of the benefits are assigned to the hospital or doctor unless you're in a situation, actually like I was, maybe you're in a car wreck and somebody else, your car insurance is paying your claims. In that scenario, you would file your own claims. You would get to pocket that money. And that's a huge benefit that a major medical would never do. I was in a car wreck and Allstate had to pay my medical bills. I was not hospitalized. Had I been, I would have been getting that $6,000 a day as income to me. And again, another huge benefit by having this product instead of a traditional major medical. If the HSP policy pays more than the bill prices, less the PPO discount, we will send the provider the PPO allowable amount and reimburse the policyholder the difference. Every claim I've ever had, I got an overpayment because I was smart enough to stay in network and make sure I got my bills repriced. Here's an actual reprice claim. This is a client of mine that actually cut 2 fingers off, and went over to Tyler, Mother Frances Hospital in Tyler, Texas. You can see the bill was $10,000, one of them, repriced instantly to $4,300. This, and that's a 56% discount. This is all we had to focus on, the 4,300, not the 10,000. Now, had he had a major medical, then Blue Cross would have repriced this to hit this. He still would have had to pay his deductible. Again, here's another claim with a different look. This guy has a 3-day hospital stay of cancer, prostate cancer. As you can see here, this hospital bill was totaled up to $24,848. They totaled his daily benefits up to $22,303. He had a $1,000 deductible, and he simply removed the $1,000 from the check and sent the balance to the hospital. He was out of pocket $35.45 after he paid his $1,000 deductible. That was before the bill got repriced. He got the bill repriced by 40% because it's PHCS network. That brought his bill from $24,800 down to $14,900. So now he's got a $22,000 check to pay a $14,900 hospital bill. They removed his deductible, and he got an overpayment check called an excess indemnity of $6,393. Keep in mind, we sell a package of benefits, and if this was one of our guys, he wasn't, he would have had a critical illness policy paying up to $50,000 on top of that. We always sell 3 policies: a health plan, an accident policy. Why do we sell the accident? Because accidents are 68% of claims. So we want to create a double indemnity environment for 68% of the claims. I'll show you the accident policy in the upcoming slide. And by the way, it doubles your commissions. The critical illness policy, we always put a critical illness policy on the breadwinner. We do that because 85% of us are going to have a heart attack, stroke, or cancer at some point.
I usually put it on the whole family. Just so
okay. And that's going to triple your commission. So your blended commissions, guys, are going to be 5 to 6 times what you'll make in the major medical world. And the rate stability is off the charts. You're going to have about a 3% rate increase per year. This is your multi-plan. This is how you look up your doctors and hospitals. And upcoming training after you contract, we'll show you how to pull this down for all your clients. Here's a sample of your discounts in the different prospective cities across the country. And we'll get those in your area as well. You can see they're huge. They're very substantial repricing by being in PPO network. The accident policy, the best accident policy in the country. This is a separate policy, stacks on top of your base health plan and pays the client. There's no deductible or coinsurance, but the accidents are 68% of claims. We sell 2 units because it's not twice the premium, but it's twice the benefits. Again, the best value. And what it does in a nutshell, it cuts a check for the client anytime he or his family member has an accident or injury, which are the majority of claims across the country, cuts them a check of 100% of their medical bills up to $4,000 per occurrence, as many times as they have an occurrence. They also have a $100,000 accidental death benefit. It adds $10,000 onto that ground and air ambulance we talked about earlier. It pays $300 a day if anybody in the family is hospitalized due to an accident, $300 a day for up to 30 days per confinement, and then up to $20,000, as you can see, for a dismemberment. So when you stack this on top of your health plan, now you've got 2 policies paying the client or the doctor and hospital. You've got double indemnity. Again, major medical, this pays in addition to any other health insurance, including workers' comp, something a major medical would never do. And this policy, guys, never has a rate increase. Had it for 20 years, it's never had a rate increase. So when you've got 3 policies, the health plan is going to go up about 3% a year. The accident will never go up, and your CI is only going to go up a small amount. Now, they'll keep the CI in the accident after age 65 because that's when they're going to need both of them most, and your renewals will be for years and years and years and years. Critical illness, we do not sell a specified benefit like the Aflac and Colonials. We sell a first occurrence. It's a lump sum, a large lump sum. Why do we do that? We use what's called evidence-based selling. The number one reason for home foreclosures and bankruptcies are medical bills. Everybody knows that. It's over 65%. What people don't know is 78% of the folks that went broke due to medical bills had a major medical insurance policy in place. So that means a major medical policy is really just an income protection plan for doctors and hospitals. Our guys can still go broke because they're not paying their bills if they're sick. So we want to get the stress off of them. And we want to add that income protection with our accident critical illness policies that will pay the client. These are not designed to pay the hospital or doctor. These are designed to pay the client so they can focus on recovery and not stress of losing everything they've worked for.
Or you could pay your deductible with that.
You pay your deductible. They're not going to have a deductible. If they do, they'll have, they can pay that. They can pay experimental drugs or whatever. What separates this from your specified benefits is they're just going to cut you a check for $30,000 to $50,000 or whatever the increment is upon diagnosis. The problem with specified benefits, you may get diagnosed as cancer. You may not have to travel, so you don't get travel benefit. You may not have a chemotherapy. You don't get that benefit. You have to use it to get your specified benefits. With it, all you got to do is be diagnosed, and you're going to get a check in the mail. And you can do what you want with that money, which again is pay your bills that are non-medically related. And again, in experimental drugs is a huge part of something that won't help you, that could help you save your life. We have two benefits, two buckets of money, if you will. If you get cancer, you could get your $50,000 or whatever your increment is, and if you 6 months later had a heart attack, you get another $50,000. So they do keep it in. Can be two lump sums. Now we have benefits in this program that are not, they're free benefits. They're not cost. They're not charging anything. One of them is the CARES. This is a huge deal. It probably cost Philip American $500,000 to put in this plan. What CARES does, they do three things. They will shop for your surgery. Anybody has a surgery, they will make sure all they have to do is call CARES. They'll give you 5 locations in your area. They did this for me and gave me bundle pricing on these surgery centers. No surprises. They made sure I knew who was in network, and they drilled everybody down to get the best rates before I ever went in for a surgery. If you ever have a situation where your plan did not pay 100% of your bill and you have an out of pocket, let's say it's a $5,000 payment you owe a hospital, they'll negotiate that for you. And generally, they'll average 70% off negotiated prices once they get involved in any balance bill that may arise. They will also find the right doctor. When I got back from the snow skiing injury, I had to have an MRI. I called them up. They gave me 10 places, emailed me 10 places, get an MRI, and they gave me their cash prices, told me who was in network, scheduled it for me, and kind of walked me through the maze and took care of all that for me. So again, 3 huge benefits from CARES 360, and we'll talk more about that in the upcoming training. This is your prescription drug card, the discount card. What you do is you simply type in your drug, and all the pharmacies come up and gives you the best discount
in your zip code.
In
so
your
you put
zip
your zip code in first,
right?
And so you would recognize the pharmacies. The client would recognize the pharmacies that are in their neighborhood.
I was actually going to CVS to get my cholesterol meds, and as you can see, it's $47. Well, it's $9 in Walmart. Now, a different prescription may be exactly the opposite. So it gives you the best buy. Then you go get it, get your discount card, then you get your reimbursement. This is the PRAM fully insured drug card. We basically put this on people who have meds or who want a good, strong drug card. It is a $10 copay for generic and a $35 copay for brand name. And it does pay for pre-existing conditions, so we don't sell it unless they've got pre-existing conditions. A fantastic drug card. When you add this to the base plan, your reimbursement will actually pay for your copays for the fully insured drug card in many cases, unless, of course, it's a pre-existing condition, and then this will be the only one paying for the first 12 months. Then the other one would kick in. Then you'd have both plans paying. Okay, Teladoc. Teladoc is a fantastic benefit. I used it 3 times myself last year. You pick up, when you get your Teladoc card in, you simply call them up and you set up your profile. It takes 5 to 10 minutes. Then anytime you get sick, you call the doctor, and he'll have a doctor in 30 seconds. If he can diagnose you over the phone, he will call your prescription in. You won't have to take half a day off work going sit in the doctor's office. There's no copay or no charge for this benefit. It is a fantastic benefit. I use it 3 times in the last 12 months. Generally, they'll resolve the issue over the phone within a few minutes. But if they can't diagnose you, they'll send you to the hospital or doctor if they feel like you need to go. But they'll advise you on what's going on with you.
We'll answer some questions. We'll
Yes.
take some questions now, and I've got some questions that I see some folks have typed in. Can you tell me a little bit more about the 12-month Pre-X?
Yeah, to keep our rates down, why this product has a 3% since 2011 has averaged 3% on attained age rate increases because we don't take pre-existing conditions. So anybody that hasn't currently been treated for pre-existing condition, that would be covered after 12 months of continuous coverage. The underwriting guys is very good. We do decline some certain conditions, but I will tell you the usual suspects, the high blood pressure, high cholesterol, not an issue, not even a rate up, not a rider. There's no riders in this policy as well. Simply a 12-month Pre-X.
Let's see, next question. How long has this product been around?
Product's been around, like I said, since 2011 when the ACA came out. It has evolved and gotten better and better and better. Guys, this is the future of healthcare, and something that is good gets better. Something that's not good gets worse. Major medical is a fundamentally unsound product. You have a huge deductible and huge co-insurance the client has to pay before he gets a return on his investment. So he doesn't ever shop. He doesn't care to shop. He doesn't care what anything costs. So you've got a house built on sand. That's when your doctors and hospitals don't have to compete for your client's business. When the client doesn't care what anything costs, there's no price regulations. You're never going to fix the health insurance problem. A product like this, where you educate a consumer, teach him to shop just like anything else he does, and teach him to look for value and get value, rate stability. And again, a client needs his medical bills paid. He doesn't need to be paying thousands and thousands of dollars in premiums, deductibles, and copays and rate ups.
Let's see. How long does it take to get licensed?
Get licensed, depending on your state, to get appointed with the company within about a week, generally.
Okay.
Once you get your contract.
Yeah, I think that's what he meant.
Yeah.
How long does it take to get a policy issued?
Policy issues generally within a few days, certainly within a week. Your client will get a phone call or an e-verification after the policy is submitted. Once the phone verification or the e-app has been signed off on e-verification, the policy will be issued. They'll have their policy within 5 to 7 days generally.
Let's see. Do we get advanced commissions?
Yes, the company actually, there's an advance option, 3 months, 6 months, or 9 months. Now, the great thing about this is nobody has a huge debit balance. Every application stands alone by itself, stands on its own. So if you get a 6-month advance, which is our most popular advance, and they pay twice a week, guys. You'll get a check twice a week. They'll direct deposit in your account. But you'll generally get a 6-month advance. So 2 apps a week, your guys are generally 2 to 3 apps a week will make $2,000 to $3,000 a week in advances. And after 6 months, that first month's business will roll into 7th month. Then you're going to get an earned check from then on out, and it's a huge earned check. So you're going to get the best of both worlds. You can continue to get your advances on your new business, and starting month 7, you're going to stack every month a nice earned checks and start running.
And you don't have to get advances.
You can take as earned. As earned builds very quickly because, again, you get paid the minute the policy's issued. Whether it's as earned, there's no lag time. So you build an as earned account in a hurry.
Every Tuesday and Thursday.
That's correct.
Are in Indiana.
Oh, you guys are in Indiana? Yeah, we're in Indiana. Anybody that's on this call that gets an email from us, we're in that state.
I think you already answered this one, Doug. How stable are the rates?
Rates are outstanding, guys. You got 3 policies. We call this a health and income protection package. We sell 3 policies for 2 reasons, 3 reasons actually. Obviously, we want to make
Actually,
the
4 if
value.
you include dental.
Yeah, the dental and vision as well. But you want to stack policies on top of each other. 3 out of the 4 policies don't even have a rate increase. Excuse me, 2 out of the 3 don't have a rate increase. The health is going to go up on attained age about 3% a year. So you've got a package of benefits that not only pay the medical bills, but also will stabilize the rates. Now, 2 out of 3 of the policies, your accident and your CI, your client's going to want to keep after the age of 65. You'll have one bank draft with 3 numbers. Once he's on 65 and goes to Medicare, you'll lose the health. They then sign him up on a Medicare supplement. He will take his critical illness and his accident policy with him into after 65 market, which will pay your renewals for years and years and years.
I think we've covered this a couple of times, Doug. Does this cover maternity? But
doesn't cover maternity. There's no policy that's all things for all people. If you find one, nobody will be able to afford it. So this policy is not a good policy for somebody wanting to have kids. Does not pay for childhood immunizations. Does not pay for wellness or well baby care and maternity, normal maternity. If there's a complication, it would step in and pay it, or a C-section, but not for normal maternity. This is not the plan to have babies on.
Can you keep this after age 65?
You cannot. Again, you'll keep your critical illness. We all know that after 65, the chance of having a heart attack, stroke, or cancer goes through the roof. Most of us are going to have it at some point, so you want to keep your critical illness policy. That's why you want to get it now where you can afford it. It won't go up as you get older. You'll be able to keep it and attach that to your med sup. The accident policy will never go up, and you'll be able to keep that after the age of 65, which folks over the age of 65 are the number 1 person to have an accident. I thought it was children. It's not. It's people over the age of 65. So 2 out of 3 policies they'll keep for as long as they want.
We're going to take 2 more questions, but please look at the screen and take down the information on the screen and contact me for product information and contact TAN for contracting. I will be emailing contracts out to folks probably at the end of the day, probably by 5 o'clock, whatever your time is, by 5 o'clock that day. Let's get a couple more questions in, Doug. Do I have to use this presentation?
You do not have to use a presentation. Once you're contracted, we've got some of our top guys. We got guys making tons of money selling this product. Happy clients, agents, careers just skyrocketing because this works. It's the future of healthcare. It's a fantastic value to clients. It is the future of healthcare, and we've got guys making tons of money and happy clients. You can use your own, but we do have several of our top salespeople in our back office. After you're contracted, we've got guys that never leave their office that sell over the phone that are making easy 6-figure incomes. And
most folks don't leave the house.
Yeah, most folks don't leave the house. And we got guys going out face to face that are killing it. We got all of those presentations on video in our back office to share with you, to bring you up to speed and get you. But you have to get this philosophically, a value proposition, and teaching your clients to shop and giving them the tools to shop with and giving them the money to pay their medical bills, stabilizing their rates, and also protecting their income if they have medical bills. That's what this does.
Yeah, I think we answered this at the beginning of the webinar, Doug. How much is the cost of the product compared to the ACA? Well, I gave you the comparisons earlier.
Generally, guys, we're going to save our clients
about 50%.
About 50% of their premiums.
And that includes dental.
Yeah, that's with accident, critical illness, dental, and health. We're still going to come in about 50%. So if you can put 50% of your client's premiums back in his pocket or back in his checking account day one, if you can eliminate his huge deductible and all that co-insurance day one, you've got a huge jump on it. You got a big head start before you ever go to the doctor as far as getting a return on his investment. And then, of course, stabilizing his rates and showing him how to get the best value with his plan. He'll have his policy for years and years.
Yeah, I think we're going to end it here, Doug, and we want to thank everybody for coming to the webinar. Please take note of the information on the screen, and I will be emailing out contracts and training information to all folks that participated.
Well, guys, I want to thank you for joining us. We look forward. This solves a lot of problems for our clients and our agents. We're excited to show this with you, share it with you, and look forward to working with all of you moving forward.
See you later.
Thank you.